mount up with wings like eagles. They shall run and not be weary. They shall walk and not faint. Exodus chapter 15, verse 2. The Lord is my strength and my song, and he has become my salvation. This is my God, and I will praise him, my Father's God, and I will exalt him. 1 Corinthians chapter 10, verse 13. No temptation has overtaken you that is not common to man. God is faithful, and he will not let you be tempted beyond your ability. But with the temptation, he will also provide the way of escape, that you may be able to endure it. Philippians chapter 4, verse 13. I can do all things through him who strengthens me. Isaiah chapter 41, verse 10. Fear not, for I am with you. Be not dismayed, for I am your God.
What's up, everybody? Let me know if y'all can hear me okay. I'm not too sure what's happening with that. Seems like all of a sudden something just changed. Alright, it's clear on your end? Alright, yeah, that was strange. I don't know what just happened. Yeah, I have no clue what the hell just happened with my headphone. Yeah, that was weird. But yeah, so if you guys can't hear me at any point, just let me know. But yeah, hopefully you guys can hear me okay. Oh, great. Great. But yeah, so something, I don't know what just, I really don't know what just happened. The stinger came out for the video I just have for my intro, and it ended up going on my monitor. I'm not sure if you guys are saying that nothing's affected. You guys can hear me okay? Just give me one more confirmation. I'm sorry. I just want to make sure before, because these are long calls, and I just want to make sure. All right, I'll take your word for it, Tony. But yeah, so if you guys just take a look at this news situation here, I want to answer a question. Oh yeah, the record button's automatic on YouTube, thankfully. It's not like when we're on Zoom, it freaking, yeah, inside joke, inside problem. But yeah, let me see. I've seen streams become unavailable and restart while streaming. Tony, well, yeah, if something happens to the stream, just definitely DM me. Any of you guys that have contact with me, just DM me from the either private group or from the free group, the free Discord. Just hit me up, let me know. Hopefully things can go smooth today, right? But yeah, so I want to answer a quick question that I had about the news from Maddie. Let me go back. Is it Maddie? Yeah. So Maddie said, how do we eliminate the unnecessary news? So all you do is you come here to this little, I don't even know what the hell you could call this. It looks like a funnel, kind of. You just click on that, and then you just decide which one that you want. I mean, you could keep this stuff on there, because they do have some impact, the light news. They just aren't as crazy, I guess you could say. You want to have all this stuff, right? You want to also uncheck a lot of this. I don't necessarily use anything else because we don't trade anything else, right? Other than the indices, and that's a U.S. asset. So, I mean, you can have the other assets. I'm not encouraging you not to have it because, again, you're going to want to pay attention to the things that may feel important to you. It's not that the Euro news and GBP news are not important, right? Because it does have an impact on the foreign currencies. If it's like interest rate combos for Euro and GBP, sometimes it does have an impact, especially if you're observing the foreign currencies like GBP USD and Euro USD. So, I mean, you can, right? This is just what I pay attention to because all I focus on solely is the NASDAQ and the S&P. Recently, a little bit of gold too. So I don't necessarily need it on there. I just want to know when the U.S. news comes out. But again, that's not to encourage or discourage you from having the Euro and GBP news. Or you could just copy kind of what I'm showing you here if you did want to, since some of you are in the private group, even here on YouTube, because this is my main focus, right? Is this news. But yeah, that's how you do that for those that may not know. But yeah, so we have FOMC statement. It's kind of interesting how, I guess not so interesting. We have FOMC, then back to back we have NFP. Okay, so we're going to have a pretty chaotic next couple of weeks. Another thing this week, very, very, very important, has to do with the, let me fix that real quick. It has to do with the federal fund rate. As you guys know, we've made a big deal about the federal fund rate the last, reasonable amount of months from September. And you could see what's happened. Price has just been expanding to the buy side nonstop. It's had some little hiccups here and there, but for the most part, we said that the rate cut that comes is going to send the market through the roof for months. And let me let you guys answer that question. Has it been that way? Have we continuously went higher in the indices like we predicted it would be the case? Even last week, I held on to the bullish narrative. If you go back on Sunday, I said we have to watch what that daily fair value gap was going to do and how that decline was going to be reacted to. Is it going to just drag price up and then just continue to use the raid lower as order pairing, right? Basically to pull in people on the other side so smart money can position and continue to go higher, given the rate announcements and all the different things leading to a bullish market. Has that continued? I would say so. I would say that we've been pretty damn near perfect. Last week was pretty damn near perfect, except the fact that we did call out the fake bull flag, which I'll talk about in a minute, and use that liquidity stayed up above the upper portion of the daily inversion fair value gap on the NASDAQ, and it's just continued to rage higher. And we favored buy-side delivery, even in the face of price giving us that fake bull flag, because we were aiming for the equal highs on the NASDAQ. For those of you that have been with me for the last week, last couple months, it's pretty undeniable. We've been pretty close to perfect, as close as you could possibly get in terms of draws on liquidity. And if you encapsulate this entire year, it's been now pretty much 11 months straight of us calling bias and narrative publicly on Sundays, resulting in every single week ending up where we're aiming at, price to aim up or to end up at, right? So, and again, I'm not just saying this. For those who may be new, maybe it's your first time, maybe it's your first couple of times the last couple of weeks. It's been nonstop all year, which has been really, really interesting, right, to say the least. When I first started trading, I never thought that I'd be able to do this like this. It's surreal at times. And I'm sure it's like that for you guys too when you look at the market and you're able to call it. But it just further amplifies the validity behind what ICT has blessed us all with, and the wisdom that I've been able to gather. I hope that it's been blessing you guys too, in some form or fashion, because that's the whole reason why I'm even live. You know what I mean? That's the whole reason why I'm even doing these calls. I could just be with my private apprenticeship students and just doing it with them, having them see this literally every day like they do. But I like being here on YouTube for those that may not be able to have access to that. And I hope those of you that do spend time here and are gracious enough to give me your time like you guys have, hopefully you guys been getting a lot of value, and questions have been getting answered, and you've been becoming more disciplined and organized, and having real expectations, not like Lambo lifestyle things. And hopefully I've been able to pull some of you guys away from the marketing side of trading, pull you kind of closer to the reality side of things, and hopefully you guys have been getting good results from what you guys have been seeing me share. And hopefully it's been encouraging to see us call the market every single week just for it to pan out pretty much exactly where we were looking for it to pan out to. And I'm not ICT, so hopefully that's even more encouraging to show that you, wherever you're at, right, in your journey, can eventually get to the point where you can call the markets effectively. And you don't have to be a genius. You just have to know the right things to look at, right? Good morning, Joan. Let me see. Gray box is left checked, but no yellow. Yeah, so the gray box is holidays. That's why we're going to keep that checked. We don't want to remove that. Gray box, holidays. Yellow is low impact, medium impact, high impact. So yeah, that's why we take the yellow out and keep the gray, because the gray it's not necessarily a news event, but it is a holiday, and we need to know when the holidays are, because the day before, day of, day after a holiday, for those of you that have been here for a while, you guys should know that it is low probability, right? All right, so that's why we have that marked off. Let me see. Tony said, learned what this really is. It made me love it even more. Good. Because yeah, this isn't necessarily a community that everybody's going to want to hang out with, because I don't pull punches. I'm not going to blow smoke up your ass, and some people don't like that. They want me to sit here and feed them non-stop unrealistic expectations, and they expect that things are going to be explained in like a 5-minute video, when this stuff, if you need a 5-minute video and you're unfortunately plagued with TikTok brain, trading's not for you, because this is just like any other business. Business is sometimes complex at times. It's the most simplistic business model, right? To have no products, no boss, no, like none of the traditional things, layered on top of what this business is. You're the product, and you have to be the best product you can be, and the most dynamic individual you could possibly turn yourself into, most disciplined person ever, so then you can succeed. But yeah, it's some stuff requires more explanation, like weekly analysis. I could come out here and make 20-minute videos, which I might end up doing, just for those that may just want the analysis. But I feel like all the details we talk about has had such a profound impact on many people that have joined me this last year, and it's just been amazing to see. Like people like Tony, for example, in the chat. I have a couple of my private group students in here as well. So again, if I was not being truthful, I would be called out in like 2 seconds, because I say a lot of things that are, I'm putting my neck out there, and it could be easily verified or discounted. If I come out here and just fall on my face every week, but I'm saying that we're accurate, I mean, it's pretty easy to tell if someone's lying. And I don't show like a bunch of, MT4 and shove how much money I make down your throat. So you have no choice but to verify what I'm saying by how I'm calling the market and whether it works out or not. And I think that's it's a good way to put viewers into a corner so they can focus solely on what is happening in the chart. rather than focus on, my lifestyle and all that, and things that don't have anything to do with making you better as a trader. You only get things that are good for you as a trader here in this community, and I guess it's looked at as a good and bad thing for some, but anyone that looks at that as a bad thing, they may end up finding out in the future that trading's just not for them because they're looking for the wrong things, But hopefully, I can switch that mindset in a lot of people that think that way. But yeah, just a reminder as well before we get started. If you do get value from the content, don't forget to like the video, subscribe to the channel. It helps me reach people just like you guys that like these videos, that like to actually learn. And, the more people we could reach, the more hearts and minds we could, change into loving this industry rather than having unrealistic expectations and stuff like that, right? And that results in better traders. It does our part in making the community better as a whole in terms of the whole industry. We're not going to change the whole industry, obviously, but in our little corner of the internet, if we could, change as many minds as possible and build the right mindset in our little, sphere of influence, I think that's doing a good service to the community as a whole in terms of trading. So yeah, welcome to everybody, hopefully you guys can get a lot out of this video today. But yeah, as we can see, like I said, we have a pretty busy news schedule this week. The first thing we think about is obviously Power 3. What could possibly take place based on what we're looking at here? Well, Monday is going to be consolidation manipulation, probably. Last week we saw a pretty aggressive Monday, which led to midweek decline with a false bull flag that we saw, which I'll again talk about in a little bit, in the NASDAQ. And then we saw it basically rest inside the daily inversion fair value gap. And then later in the week, because the news came out and CPI was approaching, CPI was used exactly as I thought it would. And it ended up being used to target the buy side liquidity, right? After we swept out and unseated a lot of early buyers. So that was kind of like the logic, right? A bullish Power 3. We kind of were able to anticipate that roughly by looking at the news. We did look at a midweek to late Thursday reversal, which I believe we saw in the NASDAQ. Let me check something real quick. Sorry, give me 1 second. I want to ask you guys too. Do you guys enjoy like the background music, or would you rather it be silent? I want to know what you guys think. Because remember, this is all for you guys. If you guys like soft, like lo-fi vibes in the background, I would be more than happy to play. I play that type of stuff all the time with my private group, every call. So with you guys here on YouTube, I'd like to know music. Okay. Let me see. All right, can you guys hear that? Yeah, Maddie, you enjoy those the private calls, huh? Hopefully. I'll share the playlist with you guys in the private group. Oh yeah, Tony. The education will always stay. That's for sure. Can't hear it? Okay, let me see. Let me turn it up kind of loud just so to verify you guys can hear something's there. Can y'all hear something in the background? Sorry, just bear with me for a minute, you guys. Can y'all hear? I'm not sure because we had an issue a minute ago. No. That is interesting. Let me know if y'all. Oh, okay. You can hear it. Okay, I just wanted to verify if you could hear it. at least a little bit. Yeah, okay. Is it too loud? Sounds kind of loud on my end. Yeah, man, we always got to have, we always got to start Sunday praising God, right? Whether you're a believer in Christ or not, you know, if you could just accept that, that'd be wonderful, because I'm not changing anything in regards to that. But I respect everybody. But yeah, so just let me know if the music gets too loud. It does kind of change throughout, so just let me know if it gets too loud, and I could just turn it down a little bit, right? But yeah, so in terms of, you know, what the week is gonna present us with, last week I did point out the possible profile, which in this case, let me go pull that up real quick so you guys could see, and then we'll go look at the chart and you could see it. See if I can find it real quick. Just bear with me for 1 second. I think I posted it. All right, let me go grab it from somewhere. Because we're going to do a very similar thing this week. So this is what we were looking at last week. We were going to look and see if this was going to be something that was going to happen. Okay, like a late reversal. We kind of had this type of scenario take place, like it ran up aggressively, but it ran up on Monday. Going into Tuesday, kind of, you know, fizzled out a little bit into Wednesday, and then rapidly declined given the false bull flag, right? And that false bull flag ended up, you know, targeting the daily fair value gap, swept out a good amount of sell side liquidity from when the Monday rally took place. And then we really did something like this towards the end of the week, going into CPI. And it just rapidly repriced higher. And remember, if you guys remember from the private group, we talked about the market maker buy model that took place, which we're going to discuss some of what we did, you know, during some of those calls, and what kind of led to us continuing to try to target the buy side liquidity. Okay, so yeah, this is not necessarily what I'm going to be anticipating this week. We could see something, you know, kind of shaky because it is the end of the month. You know, so we're just going to have to feel out what's going to take place. If we look at some of these other profiles. So yeah, I want you to do exactly what you see I have done, right? You know, you go through his videos, you get all the profiles and you screenshot them, and then you save them and you study them. And every single week, you want to try to outline what happened for the week. And then you can do the same thing for the daily ranges as well, right? Which again, we can get into all that type of stuff in great detail if you guys want me to at some point. Maybe not today, unless we have some time. But yeah, that's something I really encourage you guys to do later on. Not right now, for those of you that are new. It's just something that for the future, you want to make sure that you are really thinking about. Because there's repetitive things that take place, from Power 3 to market maker models to you know, everything in between. You know, it's very repetitive. You know, so you want to be able to trigger in that muscle memory that, you know, consistent delivery that you see price do in certain circumstances. And over years, obviously, your library of muscle memory, or pattern recognition, I should say, becomes a whole lot more effective, okay? And you can see what news schedule leads to what also. Because remember, the news, like I've said numerous times this year, the news is used as a macro. Like the lower time frame has macros, right? The last 10 minutes and first 10 minutes of every hour. The news is like a macro for the higher time frame. Okay. Let me see. Good morning, Chawezi. I just want to come say hi. I won't be with you guys this stream. I'll make sure to watch the stream. Yeah, for sure, brother. Let me know if you have any questions too. You can always DM me. I'm always here to help. Yeah, I appreciate you hopping on just to say what's up. Really appreciate that. Yeah, enjoy the rest of the replay when you do get a chance. But yeah, so again, you want to keep these weekly profiles in mind. And when we see something like this, right? Last week we had little news in the beginning, right? We didn't really, if it'll go back. So yeah, we had like little to no news up till Thursday. So what happened Sunday, Monday, Tuesday, Wednesday? Price rallied up on Monday, right? Fell a little bit sideways going into Tuesday and Wednesday. Then it rapidly repriced, I believe, towards the end of Wednesday, or maybe the somewhat end of Tuesday. I can't remember exactly. Well, we'll take a look at it. But then towards the end of the week, what happened? It rapidly repriced against the fake move, the fake bull flag that happened, unseating all the early buyers because we were so close to the all-time high. And then what did it do? It used CPI and these later news events to present us with the news acting as a macro to send price higher towards the end of the week. So with no news, the start of the week can be a little bit shaky, right? It's not going to fully deliver generally what you want to see, what you're anticipating it to do, because the news acts as a macro, right? But for the higher time frame delivery, right? We were looking for a higher time frame delivery to take place towards a higher time frame target. So what do we have to do? We have to look at the news in this way, and it provides clarity, you know. So hopefully you guys can see that. If you were able to watch price last week and we're on the live call on Sunday and Tuesday, because you know I kind of mentioned that this could be the case, right? And then of course you guys in my private group got to see it all every day. So yeah, this is a good scenario for like Thursday reversals, right? Early consolidation, manipulation, going into the news later on, and then later on, that's when more of the clear, clean price delivery took place within the higher time frame narrative towards the buy side. Okay, and so given the fact that we have the news this week that's pretty busy, it is the end of the month. So those of you that have been with me for a while, we talk about this all the time at the end of the month. The end of the month, you got to think monthly power 3. The monthly candle opens up the first week, will generally do consolidation and manipulation, go against what the higher time frame narrative is. Why? What is it going to reach for? It's going to reach for some type of PD array, right? If we're bullish, it's going to probably reach towards a bullish PD array down below us in a discounted price level relative to where price is at that time. Then the second and third week is the middle portion of the monthly candle. So what is that going to present us with? The lion's portion of the monthly delivery generally, right? So you can expect that the middle 2 weeks of every month is going to be the most dynamic, but the start and the end are going to be some of the more difficult times to really get a grasp on things. Not all the time. It's not saying that you should look at those beginning and endings of the month as a time where it's going to be unreliable. It has a higher chance of being unreliable, but at the same time, it still sometimes shows up, right? In terms of clarity and cleanliness in delivery. But the start of the month, consolidation, manipulation. Middle portion of the month, right? The 2 middle weeks, expansion, right? It's reaching for the main level generally. And then the last week, which is what we're going into now, it could generally look to cap the monthly range. So it's going to create that power of 3 dynamic within the monthly candle, within the monthly range. Anything that I've talked about from the daily power 3 to the weekly power 3, those dynamics are working within the monthly candle, right? The monthly power 3. Because power 3 is on every single time frame, whether you're on the 15-minute, 1 hour, 4 hour, 8 hour, up to the yearly time frame, and even beyond, right? But of course, we don't use all that. It's a little too much, right? It's too long. But yeah, so does that make sense? I hope that makes sense with you guys, and you can kind of see what I'm kind of getting at. And then, of course, like I said, we're really busy for the current week. So we may see consolidation manipulation Sunday, Monday, and then maybe high or a low, depending on what we're going to assume about the narrative this week when we get to the chart. So the middle portion should be pretty ecstatic, and then we get to the end of the week, and it should be where we end up capping the weekly range. But yeah, so does all that stuff make sense before we move along from this? We kind of got our landscape a little bit. We could expect a potential, high or low of the week in terms of profile, and then delivery through the two middle portions of the week aggressively towards a particular level. And then, of course, if we hit a higher time frame PD array, like if we decline and we reach for something, we may get a reversal, right? We're at all-time highs right now, so we don't want to assume we're going to pick a top, as ICT's rules explicitly describe. We're going to keep pushing price to the buy side. So if that's the case, we're going to go in anticipating, without even looking at the chart. I want to see a drop to start the week in some form or fashion, reaching into a higher time frame PD array that can then be used for the federal fund rate to send price higher. We're getting a rate cut. It's not going to increase, which is bearish for the overall market. We're getting a rate cut, another one, a pretty massive one too, from what I've been hearing. They're talking about a potential 50 basis point cut. The last one was 25, and it still was pretty aggressive to the buy side. This one, if it's a 50 basis point cut, it's going to be pretty dynamic, I feel like, right? And we're still in a mode of we're at all-time highs and we're doing another rate cut. Isn't it ironic that we're doing a rate cut right at another all-time high? Like it did the same thing last time, and now it's doing it again. It's repetitive. Things repeat. Everything is purposeful in the market because of the algorithm. It's all programmed, pre-programmed, predetermined, and we just have to be able to get in line with that. And I think this is a beautiful example of how controlled things are, which is a good thing, because if it wasn't controlled, just think about it. Any enemies of the United States or any other country, if things were not controlled in terms of the markets, like someone had a hand in protecting things, enemies of a country can come in and short every single sector of their economy and their stock market and tank everything to the floor. If that's the case, if buying and selling pressure was actually true, if it was not controlled, don't you think that all the turmoil in the world would lead to people shorting the crap out of everything? If they don't like the country, they would just try to destroy them that way. But has that ever happened? No, right? It hasn't. They've talked about it. They've said this and said that, but that's not the reason, clearly. Because if it was, it'd be a lot more blood in the streets, okay, when it comes to the markets, right? And that right there silences every argument. At least that's what silenced it for me. It made me fully believe that there's an algorithm controlling price, because this is a fact, right? I mean, it's common sense to think that if there's enemies of a country, they can easily short if everything's not controlled and there's no guardrails with someone having that protective hand behind it. It's all controlled. That's what made me really believe in the fact that there's an algorithm. Because I was skeptical at first. I was like, what is that? Like, really? I can kind of see how that's true, but I need more information. And once I was told that by one of my other mentors outside of ICT, who's also an ICT purist, I was a believer, full on. So hopefully you guys can take that as well. If you have had any skeptical thoughts about if there's an algorithm or not, or something that's fully controlled, the argument that silences buying and selling pressure is the fact that if enemies of a country hated the country and wanted to short the market, if those traditional ways of thinking are true, everything would collapse, because there's a lot of enemies of every country. People don't really like each other in terms of the leadership of these countries, right? So, kind of silences the argument, right? But yeah, so in terms of what I was just talking about the Power 3 from the monthly, weekly, daily time frame, the dynamics that all that has, how you can somewhat anticipate profiles if you kind of study them and then watch some of the news and see when the schedule shows heavy impact news is taking place. Hopefully I've been able to communicate how you can use this to start, without even looking at the chart, visualize what could possibly be the weekly profile, right? The daily profile too, right? We can get into that, but that's requires a little bit more. But does everything so far make sense as far as what I've mentioned? Just want a quick confirmation, and then I'll move forward. We'll get to the chart. But yeah, we'll see maybe a classic buy day, or a classic buy, Tuesday, Wednesday low of the week, possibly Wednesday low of the week, because that's when the heaviest news is. Okay, Jones said yes. ATM said yes. Okay. All right, beautiful. All right, so yeah, keep that in mind, right? Tuesday, Wednesday, we have the heaviest news, and then Thursday, Friday, we have something that may trigger in a Friday, Thursday reversal, depending on what happens. And we're at all-time highs. We know that we're at all-time highs because that's where we closed. So by default, based on the rules ICT teaches, we are going to stay bullish until proven otherwise. Okay, and what proves us otherwise? If 3 PD arrays get violated, and some of the other elements that we talk about, which we'll get in and discuss a little bit later. All right, so as always, once we get through that, we're going to jump to the bond market, see what we got going on here. So last week I put this bullish arrow, and we just continued. Right towards the end of the call, I definitely put like a red or blue arrow, right, in terms of showing what our assumption is, just to encapsulate everything. So I do think that we may continue this overall view. We do have this monthly wick, so I am curious to see what we can do with this. Right, so I will actually duplicate this. Right, and when you're at all-time highs, you want to make sure you do this type of thing. We're not at all-time highs here, but if you're at all-time highs or all-time lows, since there's not really much to reach for above. If you're at all-time highs, like for the NASDAQ, for example, you want to look for lower levels that price can reach into to then set up another run higher, because you want a discount array to be paired with a premium array that you're targeting. So if you're going to reach down for a fair value gap, a wick quadrant, wait a minute, whoops, I did that wrong. So yeah, if you're going to see a retracement, right, price is literally retracing to come back down and offer price at a level of inefficiency, right? We go from inefficiencies to stops. Inefficiencies or other PD arrays like order blocks, so on and so forth, swing lows, sell side liquidity, sweeps that, and then it reaches for another, in this case, a premium array or a previous high or some type of fair value gap or order block or wick quadrant, fair value gap quadrant, or fair value gap in general that's above price if we're bullish. Okay, so that's the mindset and thought process you want to have when price is, delivering, right? If we take out a high, the next thing you want to think of is not, oh, let's just continue to push it higher, and every time it, looks like it's going to go higher, let's just throw in an entry. No, you need it to sweep liquidity. You need it to reach for an inefficiency. So then you can pair that, which is at a discount relative to where price is at currently, with a premium level. Buy low, sell high, right? And this is kind of, the deeper dynamics as far as how you can actually make that statement mean something rather than what retail thinks, right? Or we are retail traders, but I'm talking about traditional retail thinking, right? So I'm going to continue to believe that overall, the bonds are going to still move higher. We do still have some unfinished business. I've had this monthly level marked out for a while. I am going to move us up a little higher with targeting. And we do have these levels up here for the 5-year. Everything pretty much looks like it's still moving the way we've anticipated. We're still up above in the upper portion of this fair value gap. Down close candles are supporting price. And we're seeing levels turn to inversions that should be holding bearish. So what in this price action tells you anything about shorting at all, just given what we're looking at? Even like if this was a NASDAQ, it'd be the same thing, right? We'd be looking for the same stuff. Are down close candles or up close candles supporting price, right? Are in this case down close candles supporting? Yes. Are bearish PD arrays turning into inversions? So far, it looks like that's the case. Are premium arrays getting violated, like up wicks, like bearish order blocks, right? Let me just confirm with you guys that the music's not too loud. I did hear it kind of pick up a little bit, right? It's definitely, I don't want it to be too loud. Just throw one in the chat if it's okay. Sorry, I gotta make sure. This YouTube's a little different than Zoom. Yeah, if you could just throw, you don't hear it at all. Oh, okay. All right. Yeah, I'll figure out eventually how to, work with it to make it so it doesn't get too loud. I'm not too sure, but we won't spend too much time on that. But yeah, so hopefully all this stuff makes sense so far. Very simple. Honestly, this is all I'm really concerned about on this monthly chart. We don't really got to do too much. We just got to look for current high. All right, we'll look at this previous week's high. It's also the current monthly high and the current monthly low. It's a monthly low. Let me put that there, monthly low. That's the current monthly high. Notice how this monthly candle opened. Think about what I talked about earlier, right? The monthly candle opened here, dropped down into what? It dropped down into the wick, right? It was above the open price here on this bullish monthly order block. All right. And it basically stayed there. It didn't really do much, right? It spent a little bit of time down here, but it reacted strongly off this down candle. What is that telling us? That's a change in the state of delivery overall. Or it's a beginning change in the state of delivery after a stop hunt that also had SMT at the lows. Let me actually move that up a little bit. Okay, so this is starting to show signs that on this upper time frame, it wanted to reach for a premium array. What premium array? This premium array. Okay, let me adjust that. Okay, and you can see that the 25%, well, 75, but 25, 50, 75, because we're going higher. You can see that it's been really responsive off of that. So I can say that if this reacts and smashes price to the downside and starts really picking up, digging into this again, we may have an overall, change of interest, right? It may want to go down further, right? We're still pretty much in a mess on this monthly chart. But again, these are levels that we're going to watch. We're kind of in between the upper wick quadrants, 25% here, and then we have this lower wick quadrant as well with this bullish order block. So if it's bullish, it should not spend much time down here. It should be pretty solidly showing us signs that it's going to be respecting these down candle or lower PD arrays, I should say. And we should be very reactive, preferably not even reaching back into this wick 50% level if we're heavily bullish. Okay, so those are the characteristics that we'll keep tabs on to justify this monthly chart delivery being bullish. And then of course we carry those things down to the lower time frame, and we're going to keep tabs on the fact that we have these upper targets. But like I said, you want to keep tabs on this first, because before it can get up into these levels, before it can get down into these levels, if that's what it chooses to do, we first have to break outside of this range. So that makes this range the most important at the moment if we're looking to try to frame a setup or a narrative, targeting like this up here or this down here. It's going to have to break outside of this low or this high. So those are targets before anything else. If this is the only time frame we're looking at, which for the moment it is. Okay, so in terms of what's important to me, that is pretty much it. You can make an argument for new week opening gaps. That's what these gray boxes show. It's kind of sloppy because we're on such a high time frame. But when we go down to like the weekly. I mean, it looks a little messy there too. On the daily, you can kind of get a better picture. Each of these little areas that are outlined, it's showing you a new week. So you just go to you just go to each box and find the gap, and that's a new week opening gap. All right, and I'll leave that for you guys to do. You guys can come over here and find that if you want to do so, just for further supporting levels. I do believe that this, what we have here is probably enough. Right, we don't want to see it dig too deeply beyond the 50% level. Let me go to the weekly chart because I have something. Yeah, so we got this wick here too. So we got that monthly wick, and then we have the weekly wick as well, right? So let me actually make that purple because that is. I like color coding things so we don't get lost. Yeah, so these are levels that are supporting us, right? If we go to the 2-week chart, we see that this is a bullish order block. Okay, all of that's inside that monthly view that we just looked at, right? Let me check the chat real quick. Okay. But yeah, so all this stuff is working within that monthly view. So yeah, we definitely don't want to see it get down below this monthly wick midpoint if we're bullish, which we're not seeing. You see the reactiveness inside this level in here. Very touchy, right? It's very reactive from this order block, from this upper wick of the order block, and that's also inside the monthly wick 50% level. And the reaction here came off of the monthly wick 25% level. So that acted as a brick wall in terms of targeting and reactive levels. This is an opposing PD array to the uptrend. So what did price do? It used this order block to bounce this off for the week last week and the week before that, to then target what? To target the quadrant here on that monthly wick. Okay, that monthly wick also has an up candle here on this weekly chart. So we're kind of working inside that range as well. But you can kind of see how things from time frame to time frame overlap, and how important it is to have at least a rough estimate or a rough outline of what's on the higher time frame above you or below you, depending on what your narrative is. In this case, we're bullish. Because if we react bullish, you're able to anticipate reversals taking place or counter trend frameworks if price hits an opposing PD array to your narrative. Okay, like if you're bullish, for example, and it reaches up, and then on the higher time frame you hit a bearish order block or a bearish fair value gap, or we run out a high, right, a previous high. That's an opposing PD array. So the moment price hits that, you got to be anticipating a possible rejection. Not that it's going to for sure happen aggressively and present an opportunity, but it's a good moment in time that price will basically hit a speed bump, right? It may pause right there for a little bit because it's a significant level, right? And that's price is referring to these PD arrays like little magnets. So when one magnet sends price higher, like it rockets up, it's going to hit another magnet, and that magnet's going to reject a little bit, and then until it breaks through it again. And if we're bullish, that's what we want to see. We want to see it hit, maybe retrace a little bit, but be short-lived, and then just continue and continue and continue until it hits a level that, you know, proves to present us with a break or a shift in market structure that then kicks us into our invalidation principles to try to observe price turning around entirely, right? If it all aligns. But that's how you can kind of look at opposing PD arrays or use opposing PD arrays from PD arrays that are reacting in line with your narrative, right? So like a bullish order block, a bullish fair value gap, SMT that leads to a shift in market structure, right? When we're having a retracement that ends up continuing, that's the type of stuff you want to look for. Opposing PD arrays, previous highs, wick quadrants from the higher time frame, because those are PD arrays too. And then when they hit those levels, it's reasonable to anticipate that we may turn or pause at that level, right? So does all this stuff make sense so far? Just throw a 1 in the chat if everything makes sense so far. All right, perfect. Appreciate you, Joan and Fritz. Appreciate it. But yeah, so again, from this weekly chart, we have that order block on the 2-week time frame. We could just classify that as a weekly order block, right? We just couple it all together. And so prices now did what? It's taken out buy side. So what did I mention earlier? I said that once a stop is taken, or in this case, a high is taken, it's reasonable to anticipate that we may reject. We also have the context that it's an opposing PD array here from that wick quadrant on the higher time frame monthly chart. And so that can kind of make sense of why this is having a hard time breaking out, because it's hitting something significant, right? It's an opposing PD array, okay? And it may trigger in price, retracing a little bit, but because of the rate cut coming, I don't see this declining aggressively. The rate cut, when indices are at all-time highs, rate cuts are positive. And if the indices are going to rally, if the currencies are going to rally because rate cuts cause that type of condition, we're probably going to see this continue to rally, and that should lead to the indices rallying as well, right? So just off that fundamental fact, we can kind of understand how this can potentially be trusted, unless, of course, price was to break down and get below this. That would change the overall view. Okay, so we have a long ways to go to change our opinion in terms of overall where this market is potentially headed. Okay, hopefully you guys could see how that's liberating and how it allows you the ability to hold on to a narrative. Okay, and how you can trust your narrative, as we did this week on NASDAQ, because we're rooted in the higher time frame. Everybody and their mama probably thought that things were going to short. They probably thought that all-time high that got broken recently was strong resistance. It led to a fake bull flag on the NASDAQ, and everyone was probably trying to short, thinking that the world's ending. Every drop, that people think the world's ending, right? But since we're rooted on the higher time frame, we were very patient. We let the market reposition smart money in sell-side liquidity and a discount, and we saw it accelerate, and we were able to be there for it because of us being able to hold on to our higher time frame narrative. Okay, Fritz says keep focus on bullish PD arrays. Yeah, if you're bullish, you want to keep focused in terms of targeting on bullish PD arrays. If you're bearish, you want to keep your attention on lows, which is a PD array, but overall bearish PD arrays for targets, right? And premium arrays in a bearish trend, you would be looking at as areas to reaccumulate shorts, right, or sell-offs. And in this case, bullish PD arrays should be looked at as accumulation areas for price to keep going higher, targeting other opposing PD array levels like this, like this, like this, like this, right? And then deeper into this order block too. All right, it's ironic, the 75% here from that monthly wick is actually a weekly order block 50% level. Pretty interesting dynamic, right? And then of course this down movement here, you want to look at that as a market maker buy model as well. Okay, any type of decline could be looked at as a potential market maker sell model idea on the lower time frame, and and when it reacts aggressively, showing evidence that it wants to continue going higher again, that becomes a market maker buy model, or that you should be thinking in that way, right? So drop to go higher, market maker buy model, failed market maker sell model potentially. Given the stop point here, maybe it did offer a profitable sell model, but higher time frame wise, down close candles are supporting price, right? Down here, here, right? The whole string of candles. So order flow is bullish. And because this asset impacts positively what the foreign currencies do and what the indices do, before we even get to the indices chart, we're thinking bearish DXY potentially, because this is inverted to the DXY. And we're thinking bullish indices, as long as things aren't heavily manipulated, and there's no crack in correlation, and things are moving in sync. That should be the trustworthy opinion. And with the rate cut coming, like I said, it's even more amplified that is something that I'm going to stick to until proven otherwise. Especially because the indices are at all-time highs. That delivery is supported by this going higher, right? Okay, so there was a lot mentioned there. Let me know if you guys have any questions. But that's essentially all we're going to be looking at for this asset on these time frames. Of course, when we go to the daily chart, we want to pick out from this time frame the Friday's high and low. Before anything else is considered going into a new week, Friday's high and low, you have to mark that, because that is the most recent liquidity from the most recent daily range. So the previous high and low, if you think about it, in order for this weekly high to get targeted, or this monthly low to get targeted, or anything outside of this candle getting targeted, we're going to have to break through this high or this low to do so. Even if this low is going to be your target, when a new candle forms for the week, it still has to break through that. So that liquidity is important, like first and foremost, right? So yeah, I hope that makes sense. So you want to mark out the Friday's high and low. I'll let you guys do that. I'm not going to make this any more cluttered than it already kind of is. I just want to make sure that you guys see a lot of the important things. That's why there's so much on the chart a lot of times. Right? So yeah. Hopefully that makes sense. Right? And I think we'll leave it with that on this asset. Fred said, does it help at all if we look at the 12-month chart? Yeah, absolutely. If you're comfortable with the higher time frame ideas and you are not going to be too like influenced like tomorrow, right? If the yearly chart, the yearly candle is showing you something, it may not manifest for another 6 months, 3 months, right? It may be headed in that direction, so it's good to keep that on your chart, right, or in your notes, right, just so you can refer to it when you need to, just to keep tabs and see if we get close to any of those levels. But it's not something for day to day. It's more of a quarter to quarter type of view. But there's, obviously sooner reference points like quarterly chart. Like we look at the 3-month chart all the time. Those are levels that you also can use outside of the yearly. You could look at the yearly chart and see power 3, right? You could look at the yearly chart, go to the 6-month and 3-month, and study how the year's power 3 played out. What did we do? We dropped aggressively to start the year, and what did it do? It rallied up, and we're at all-time highs. So what has the year presented us in terms of power 3? On the yearly basis, bullish power 3, right? And you can segment out or separate out each quarter and their role that they've had throughout the yearly range. Similar to how we take the monthly candle and use the weekly, the weeks, and give them specific responsibilities, like the start of the week, the first week, second and third week, and the fourth week play a role inside the monthly chart. All 4 quarters play a similar role within the yearly perspective for power 3. So you kind of see where I'm going with that and why that would be so helpful and important. It helps you just get a deeper understanding of narrative, right? And where what's really going on outside of just being on the daily or 15-second chart and just kind of swimming in an ocean that you don't know how to navigate, right? Which most people, don't really know what's going on, but we do, right? So yeah. So good question. Let me see. To annotate the high and low. Yeah, that's exactly what you'd want to do. Previous years high and low, whatever's high and low is close. Just like how we operate with this, we look at where the close high and low is, right? What's the next possible target? And you could do the same principles that I talk about on the monthly chart, quarterly chart. Everything can be applied to every single time frame, but it's relative to that time frame. Let me see. On 12 month, we're inside of a bullish order block. Oh, nice. Yeah, that, and mind you, like I said, that 12-month bullish order block, right? Price, I think we used something similar to that to pick the low of the year. It was a bullish order block, I believe, on the yearly chart, and price rallied up aggressively. Yeah, I knew that he was going to lessen the tariffs. I kind of figured that he was going to, not keep it so exaggerated because it's kind of the way he navigates negotiations. He goes like way up here, but then it's so high that the person he's negotiating with, they'll bring it down to the middle, and both parties win. Because the objectives are always somewhere in the middle. But when you start off intense on unrealistic grounds, it's easier to pull the negotiated party to the middle, where more close to your goals, than it would be if you start at your goals and then they negotiate you below your goals, right? You go way above so you can negotiate to where you're really at. And we can see that that's what's happened. And using that logic, understanding that that's how the president of the United States is, I was able to use that context plus the yearly bullish order block to pick the low when it presented, and he came out with his opinion or his statement saying he's going to lessen the tariffs. So we kind of used some more advanced analysis outside of the chart, plus with the chart, right, like real world mixed with technicals, and we were able to do some spectacular things with that low of the year. and call it, right? We called the low of the year and been bullish ever since. Navigated here and there for bias with bearishness for retracements, but yeah. So yeah, hopefully all this makes sense. And I think this is pretty much all we'll have on this chart, okay? And we're going to continue to try to assume that we may go higher still. I wouldn't be surprised if we do try to dig lower a little bit more. It may want to sweep out this low. We do have this bullish order block. It's kind of punching through. If we move up in time frame, we can see there's a wick here. There's lots of overlapping wick levels, and there's been a lot of delivery taking place. So I don't think we're going to dig too deeply, because again, I'd prefer, if we're going to be exceedingly bullish, which I feel the rate cuts that are coming are going to present us with, we should not get to this 50% of this wick here on this monthly chart. It really shouldn't do that. And the wick here, even on the weekly chart, right? It shouldn't have to come down there. It should stay up above if we're going to be really bullish. That's a beautiful sign that we're really bullish, okay? And then again, this impacts what the indices are going to do. So if this is going to be bullish, and we see that we're bullish in the indices, right? We see that as a result of the things that are coming. We have really solid grounds to keep pushing price higher, and any type of sell idea should be short-term in nature to set up further buys. Until that changes, that's what we're going to stick to, okay? And this is very helpful in that regard, right? So yeah, that is my opinion on the bonds, and we are going to keep our overall intention going bullish. All right. So let me. We're gonna go to. I thought I had the yields lined up. I guess not. All right, so the yields, they basically came to what I thought they could go to, which in terms of like a retracement, it's been very bearish. We did hit this weekly bullish order block, 25% level. You see the opposing PD array acting as a brick wall to trigger in a retracement after it's been really bearish. You see how this inversion for value gap, how price came into it after being bearish, giving us a quarterly shift, and then it used that as a reactive area to set up the retracement, and then once it retraced into a logical level, it ended up tanking again. We talked about all of this price action up here and why it didn't have to go up there a week ago or a couple weeks ago. So hopefully you guys were here to pick up on that lesson, because it's proven effective. Right, we talked about balanced price ranges and many different things inside this. So hopefully you guys remember that. And now we got this wick in here, right? So this wick, we're reacting off this weekly bullish order block. It's still bearish. If we're going to be bullish on the indices and bullish on the bonds, this has to do the opposite. If it's going to be symmetrical, this needs to do the opposite, because this being bearish will pull down the DXY or influence DXY to want to go lower, because DXY follows this market. There's a saying that goes, the currencies for a country chase the yields, right, of the interest rates for whatever reason. Okay, so if the yields drop, which is what the rate cut is going to do, is going to cut the yields, which is why you see it declining off the rate cut that happened recently. Okay, and that's why it pushes the bonds up and it pushes the indices up, because this drops, and this is opposed to what the indices and foreign currencies are going to do. Okay, and it also, like I said, yanks the DXY lower. So we'll see, right, how it's going to react in here. I'd really like to see if this is going to be bearish. Spend a little bit of time in here, maybe not attempt to get back to the 50% of this wick. You guys that have been with me for a while know that a wick overtaking a displacement or candles like this, the 50%, right, this whole range the wick has covered should end up acting as a balanced price range, similar to this wick, how it didn't even try. I guess you could say it kind of tried, but it didn't get fully to the 50% level, and then it just sold off. I think a similar thing's going to happen here. Not only that, but it's also a bearish order block here too. And we have a weekly inversion fair value gap that's kind of overlapped from over here You can make the argument from here too, right? They're kind of just overlapping together. So that's a very, very important level. It's been traded through multiple times and acted as support and resistance multiple times. So if that level gets traded through, it may upset the down movement. I don't think it's going to be the case. I think that, we've taken this. We did target these equal lows when we were up here. Went from this internal range liquidity to the external here. And that was a beautiful beautiful situation that played out. And, from inefficiencies or a PD array to stops, right? Perfect example. So yeah, we'll see if we're going to do a similar thing, right? We've taken stops. We hit an opposing PD array. It's triggering in potential retracement from this weekly candle or this weekly perspective. If we go to the daily chart, we can kind of see something in line with that. It is kind of breaking through this. Hasn't really closed above it, but we do still have a little ways to go if it does want to get up there. I don't think this is even in the cards. It could be, but it's, we'd prefer, if it's going to be exceedingly bearish, that we stay below this wick quadrant, like breakdown in here, right? Because that wick should present us with a BPR to the downside. And we have this inversion fair value gap level that's overlapped multiple times. It's been pretty reliable thus far. We don't really have any reason, given the rate cuts coming this week in 3 days, we don't have any real reason for this to want to accelerate to the buy side. So that's kind of what my opinion is going to be. And again, like I said, we have this low here. We have the previous week's low and high. And then we have the weekly high here that's really in close proximity from 2 weeks ago. Hey, let me actually take that off a little bit. So this high, and this low are the most important liquidity pools for us to target, because if it's going to go higher, it needs to break those first. If it's going to go lower, it needs to break this first. I would not really be too overwhelmingly surprised if we open up, wick above, attempt to get in here one more time for power 3 bearish, and then we see a down candle that slices through all of this. Because it's the end of the month, it may be slow, right? We may not have a crazy expansion because they're ending the month, right? So they're going to close the monthly candle, and then, we'll probably see more excitement going into next month. We have a holiday as well, Halloween here in the United States, just in the West, right? So we'll kind of see what's going to happen with that. I'm not sure it's going to have too much of an impact. It's not too crazy, but I think it is. It's not even mentioned, right? So I guess it's probably not going to be too important. We do have a tentative news, so it may not even occur. The end of this month like these days, it may not even have this. When it says tentative, a lot of times it's not going to be present for whatever reason. I think this is specifically because the government shut down. Let me see. Yeah, I think this is tentative because of the government shutdown. Let me see. Are they saying that NFP is tentative too? Oh no, they're gonna actually. Oh, they somehow found the funds to do the freaking NFP this time. Somehow. Oh, like that's ironic. But yeah, we have that next week as well, so we gotta be cautious of that. Don't worry about the daylight savings time. Don't worry about it at all. It's not gonna mess anything up. This is a 24-hour clock that we have, so because it's 24-hour military time, it doesn't really affect much, right? It may be a little finicky with the delivery, right? It may be kind of sloppy, because again, it's just another excuse that they can use to do a bunch of nonsense. So definitely be cautious the rest of the week to finish off the month, because we're on the end of the month and then the start of a month. Like I said at the very beginning of this, to set the tone, these endings of the month and the start of the month, those are going to be two parts of each month that may present you with some issues clarity-wise. It may be consolidated. It's like the end of a session, right? Sometimes it'll just reverse what it did because it's trying to create the daily candle and finish it off, create the upper or lower body of the candle depending on where it's headed. Most of the volume's in the middle, right? So yeah, keep that in mind. But I do think that this is going up to go lower. Okay, just in simple terms, we'll see if it was to break this high, like I have shown here. That's my sell-off invalidation, because it will be breaking a lot of our invalidation levels. So yeah, Harley, good to have you, Harley. One of my superstars in the private group. Everyone go follow his channel if you want to see some of his stuff eventually. Daylight savings time means I need to wake up an hour for a week as a clock in the UK. Oh damn, you guys already had the change, huh? That's interesting. Yeah, well, I guess that's a negative, right? I don't like that with the change here in the US. When I'm up at the same time, but it's super bright outside. I like it when it's dark. When I get up at 3 a.m. I like it when it's dark. Now when it's like 4 or 5, the sun's already coming up. I'm just like, ugh. I like the dark. It's I don't know, it's a personal thing, I guess. But yeah, so hopefully it makes sense what we're looking for. This low, same with this low, to that high. If that's going to be a bearish order block, like we talked about on that weekly chart, order blocks are balanced price ranges. The large wicks that overlap displacements like this, it should act as a BPR. So we should watch that hold in that capacity. And if it doesn't, again, it's just showing us evidence that it may be changing sentiment. Okay? So yeah, those are some things that we're going to think about. All right? So hopefully this makes sense. Where's the little arrow? Let me see. Put that little arrow up. All right, we'll see if we can get this to continue. Just, maybe retrace and then go lower. All right. So yeah, do you guys have any questions before I move on about these two assets and why we spend so much time on them, and what is potentially going to take place and what our expectation is? Just give me a 1 in the chat if everything's good and I can move on. All right, perfect. Thank you, Tony. Thank you, Joan. All right, perfect. And then we're looking at the currencies here. Very interesting. We've been watching this here to see if it can hold price, get us up to the buy side. This SMT has proven to be valid for an SMT to go lower. Okay, let me clean this up a little bit. All right, we took buy side here, presented us with a drop on the euro. We failed to take buy side here, and that presented us with a drop. It's been very sideways. These ranges have been back and forth, back and forth. Anyone trading Forex right now, I'm sure you're having a hard time. If you're not cool with, taking, like what, 20 to 30 points or pips, like short-term moves, not like big, massive moves. I mean, there's been some, if you know what you're doing, obviously. But, I mean, why trade in a market that's, the global economy, currencies and as a whole, there's a lot of chaos happening. Like there's changes that are happening to every financial system, from the fiat, normal fiat, to digital, and all the conversations about crypto and digitizing and all this stuff. So it's been having a real noticeable impact on the consistency in these markets. We've been able to call the markets, right? It's just been kind of sideways. We've been in a state of mainly observation for these assets. But, like we were watching this to see if it would hold. We were stuck in this moment between this bearish order block and this bullish order block. And it seems like this bullish order block is potentially failing. So that may set the stage for the equal lows here that I've had your guys' attention on if it was to fail. It looks more so like it's going to reach into that. We still do have the upper or the middle portion of this monthly bullish breaker. So unless it was to displace and get back above this candle and this candle here, that would be the only reason I would be looking to buy. Otherwise, it looks like this is just too obvious. It's too clean. Way too clean, way too obvious. We have equal lows here too, and we got relative equal lows here too. So, it would not be unreasonable to see them just displace. But for now, they're in consolidation. This one's in consolidation still too. Looks like it's more heavy than the euro. So, same with everything else. The target is going to be here and here potentially. If it goes higher, that's what we're aiming at. If it goes lower, this is what we're aiming at. And if we break this, it's going to definitely break down below this. I'm more so leaning towards this reaching into here at some point, somehow. Or not somehow, but at some point in the near future. With a rate cut loading up, we may see a strong movement getting down into this. But then again, all these countries have their own issues. So trying to gauge what they're doing relative to what the US dollar interest rate is going to do, it could be kind of inconsistent, hard to gauge, because there's just too much stuff happening in these countries. So that's why it's going to be good for you to if you focus on these foreign currencies or assets from another country. It's going to be good that you focus on what their news is presenting you with, what's happening in your country. Because stuff in the U.S. may not have as big of an impact as it once used to have when things were peaceful. So, just some things to think about, right? This is an example of it's not all about the charts by itself. The real world impacts the charts too. So you got to have your ear to the politics and economic policy and what they're doing. It's very important, especially these days. Fritz said, is the current market conditions best suited for... Yeah, I do not at all recommend swing trading. ICT's come out and said that this year too. It's just too dangerous. Swing trading means you got to have a bigger stop, like 50 to 100 points, maybe, close to more, essentially, depending on what the setup looks like and what your rules are. And what you're aiming at. But I mean, I don't recommend it. I really don't. At max, I don't even recommend holding overnight. Maximum, maybe the whole session. If you catch a tiger by the tail and it's just racing, and you have an obvious target. But I really don't recommend swing trading right now, unless you're doing long-term position trading for a retirement fund, like a retirement account, and your expectation is eventually in the next, 1 to 5 years, price will be bullish. But we don't even know that time horizon. We have no idea. China could invade Taiwan. We may get the NATO countries involved with Russia, right? So that type of stuff happening, who knows what that'll do to the market? If all the major powers end up in a conflict, if that happens, we're in World War III, and all the stuff we've seen has been a start, right? It was the start with the war in Europe. If everyone gets sucked in, right? That was just like the prerequisite. Pray that doesn't happen, because that's the last thing that the whole world needs is war, because people have specific goals for whatever reason. Wars are rich people's game, right? It's a government's game, right? It's not necessarily always a good cause. Some can be justified, but everybody that's paying for the wars is rich people, right? It's the elites that that don't really have our best interest in mind, giving us digital IDs, all these things. Right? We don't got to get into conspiracy theories and whatnot. But yeah, when you see war, the underlying reasons are not generally what the public is being told, which we've learned for the most part as a populace for decades, generations. So. But yeah, because that's the risk, because that's happening, wars and stuff, specific to your countries. If you're trading currencies and whatnot, that has a direct impact. Same with us in the U.S. trading indices. Wars are not good for business. Wars are unstable. It creates chaos. And chaos is not what the market likes. The market likes certainty, or at least somewhat a resemblance of certainty and predictability. And when that's not present, like with wars, it could be a bit chaotic. But then it can also be very profitable too. Like for us being able to call the market, because the volatility is crazy. It sounds kind of crazy to say that, but that's just the reality. When there's chaos, there's volatility, and we as traders need volatility. But regardless, we got to pray for no war, because I don't like seeing people get totally obliterated on any side. Right? Doesn't matter. But yeah, just pray for peace, right? Yeah, swing strategy. Imagine Nas handle. Yeah. Oh, dude, the indices have been wild. Like, you guys have seen it. I don't even got to say much. It's been insane. The average daily range of the last 5 days for the last, 4 months has been well over 400 points. That is not normal. 100, 200, that's normal range. I mean, we're double the normal size because of all the stuff happening in the world. It's just, there's so many excuses that they have to just whip the market around like a savage. And if people aren't ready for it, if they don't respect risk, I mean, this is what we got to deal with at times in the market. Not every moment in time is a time to push. You want to be able to get in and make an income, not get in and get rich off of 2 or 3 trades or just a year of trading. You got to have a long-term view. We all have our own goals, but you want to have a long-term view, and that doesn't come from home runs, just magic, right? It comes from long-term, consistent gains, reliable gains that stack up and compound over time. That's the name of the game. That is the special tool that us as traders are able to harness, is compound interest. Meaning when you make money in an account, you're growing the account. If you risk 1%, that 1% is gradually increasing in value, but it's staying 1%. So the compound effect of that, growth becomes larger and larger and larger. 1% on $1,000 accounts, what, $10 or something, right? But when it's 100,000, it's $1,000. So that's a good description of compound interest and how long term that's the tool that we have to harness. And that's what ICT means by the compound interest will do the heavy lifting. Time will do the heavy lifting as long as you have an edge and you can be consistent over time. And you want to always remember that. You don't want to be sucked into the social media mindset of trading where I'm trying to aim for home runs all the time. The person that gets consistent base hits like we do will outpace anybody trying to risk the farm every single time, taking huge wins but massive losses. It's less stressful too to do things the way that we do, the way that ICT teaches. You don't want to be a mess the whole entire time. Of course, it doesn't mean that you won't get big gains here and there. But you have to obviously have a good plan so then you're solvent when those times arise. You'll make 1% here, maybe 0.5% here, and then maybe the next day you'll make 5%, maybe next month you'll make 20% because you catch a big runner. You never know. But the baseline, you got to have a solid baseline, focus on compounding with base hits. And, if you're blessed with some home runs, so be it. But you don't require that, right? That's the mindset you want to have. And, it's a successful mindset. Any trader that's worth listening to, any of these people that you see online that make massive gains, they're still risking a low percentage. They just have a big account, right? They're not, just because they make $10,000 in a day doesn't mean they put 20 lots on, and it's a home run. No, it's a normal thing within their risk parameters, and they just have a bigger account. They're just further along than some people are that are watching them, and early on, it's hard to look past that. I know, right? I used to trade with $500 accounts, $300, whatever I had, $1,500 accounts. And it was hard for me to see that, but when you're able to shift that mindset, it becomes a lot less stressful. And you could see that, you're trying to get rich for sure. right? And there's no guarantee, obviously. I can't guarantee anything. No one can. But compounding, focusing on that, that's a sure proof way to get good results over time. And again, it's not something people like. They don't like to hear that. They want me to blow smoke up their ass, and sorry. It is what it is. But we're consistent here, and I'm sure you could piece 2 and 2 together, especially those of you that have been here for a while. But yeah, so this is my opinion on the euro and GBP. I do want to observe how we're going to treat this and see if we can't get down below these lows here, maybe blow it out, maybe not, right? Maybe it respects this and displaces up here. And if we can get that change in state above this candle without fully breaking through this candle, we will probably leave this, and then we'll look to continue to target up here. And this will be a low resistance liquidity run if it does end up trying to get up there, okay? This one may be a low resistance run too, if we can prove that it wants to get down there. But so far, we don't know. We're still in a range. So it can go either way, honestly. I do think the rate cut will be positive for this, potentially. But again, these two countries, they're going through it right now, right? They're going through it. So, or the euro is kind of like Europe in general, and then GBP, right? It's like the UK. But yeah, there's a lot of stuff happening out there, so be mindful, right? So we'll see what it wants to do. But that's my opinion on that, so hopefully that is useful. And now we'll get to the DXY. And we'll fly through this, okay? Looks like there's a lot of things going on, and yes, there is, right? Let me clean this up a little bit. We could start on 1 and then move around. So yeah, going back to what I was saying about up close candles supporting price or down close candles supporting price, when we're observing order flow, we can see how, let me actually remove that. We do have a failure swing up here. Okay, we do see that down close candles are supporting price here, 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 right? So we're digging into this wick up here. Because of the bond and yields market, how the yields look like they may go lower and the bonds look like they may go lower, or the bonds may go higher. And we look at this, when we look at this monthly chart with that context, if this was the 5-minute chart, I would not be thinking that we're overwhelmingly bullish, unless of course we were to break above this high. So I'm going to require that to turn off my interest to go lower. Short term, it does look like it's really trying to dig on that weekly, daily, and lower time frame chart to the buy side. So we may be seeing some early signs that this is in fact going to eventually be purged and then change its state of delivery overall. We kind of did close above this, and we have not been able to get back down below this down candle. This down candle is also inside of this 3-month fair value gap. We do have a gap up here that it may reach for. All right. We do have this high to keep tabs on. If it looks like it wants to gravitate up there, this is the quarterly chart. This is the current quarter. Okay, so we got that quarterly high that may eventually become significant. But we're not going to put too much stock in that for the coming week, right? That's these highs up here, so yeah, I mean, it is a possibility. But again, the rate cuts, we got to see what the rate cuts are going to do, because that's generally bearish for the DXY, because it's going to cut the yield. And if the yield gets cut, it's going to go lower. If the yields go lower, it's going to drag the DXY lower. So this may be all a fake move, right? Given the monthly chart still looks like it still has some signs of bearishness. Okay, so we're going to have to observe how this wick is going to react. This wick here too, it looks like we are respecting the 50% of it. We don't even got to put the fib on there. We could see that it's somewhere in this area. That's also coupled with a daily fair value gap. And price is pretty solidly respecting that, and we're now back below the daily fair value gap here. The price has been reacting from, right? And again, price rallied up. What did it do? It hit an opposing PD array. What did that opposing PD array do? It set you up with a counter trend sell-off. Okay, right? It ended up pushing price away. It was reactive. So once it fulfilled that, buying in this would require a retracement to then go higher, and then we would like to see it break through it again. Right, but it hasn't necessarily done that, right? And it's respected it. And again, like I said, that the yield market is giving us an X-ray view that we may not be done entirely. We may be setting up engineered sell-side liquidity for an even larger run lower in anticipation for this massive rate cut that's coming that is going to cut the yields, right? And so the yields are going to go lower, and that may drag this lower. And again, that promotes the fact that the last 21 rate cuts that come at all-time highs for the indices has led to the next, 6 to 12 months being bullish in the indices. If that's going to remain true, as it has 100% of the time, the last 21 times, it was 20 before this previous one. Now this one, or the one that just passed that resulted in bullishness, was 21. Now this may be the 22nd example of rate cuts leading to bullishness in the indices and bearishness in the DXY. Right? So we'll see. Right? We'll see if that's what's going to take place. It looks like we're still respecting potential bearishness. It has been bullish in the short term, so the bias has been reaching for this premium array. If you take the larger range that we have here, right, this high up here to the low, it's now in a deep premium, right? It has been, order flow has been kind of changed to bullishness, but again, it's going to be very important what it does here for long term. So we're going to see, right? And the rate cuts have me feeling like this is probably going to take a dive because it should result in bullish indices. Okay, so on the back end, we're going to keep that in mind. We got this bearish order block here. It's reacted from this daily fair value gap, like we talked about. And so if we can break down below this, or stay below this in here, like we talked about last week, it hasn't broke outside of it. So if it stays below it, that's going to continue to support the fact that price is going to be interested in declining. This could be forming a market maker buy model if it does choose to try to rally up. We're going to have to get outside of this daily fair value gap and close above it for me to really solidify that opinion. Otherwise, this could simply be a retracement aligning in terms of timing with the rate cuts that could be the catalyst to send this price lower. Because remember, higher time frame needs news events to be able to deliver big time moves that are meaningful in this higher time frame. Okay, so if this is setting up a retracement to go lower, isn't it ironic that the rate cuts are happening this week and we're where we're at? Like this could be reasonably looked at as a bearish retracement or a bullish retracement to then target sell side again and stay in line with that monthly bearish order flow that we've seen is still intact. Right? So this is a thought process that we're going to keep in mind going into this next week. And then we're going to observe what the reaction is going to be towards the end of the month. And we'll see what these rate cuts do. Right? And we'll see if it's going to continue to hold on to the higher time frame monthly bearishness, or if it's going to close on, in this case, above this fair value gap, which was extremely important last week. And if it does do that, it closes above it, my attention will move up to here very confidently. And then we'll try to see this as a low resistance liquidity run. And, we'll have to just be flexible around that if that does take place. But for now, we're still below this weekly wick here, the 50% level. So that's pretty enticing, right? This upper wick, the largest one. You could look at this one too, but this larger one is more important when there's multiple next to each other. They all have their quadrants and they're all reactive, but you can keep it very simple and pick the biggest one out of a group of them and then just measure out that range and use those levels. You're not going to be perfect. You're not going to get every turning point, every single piece of detail in the marketplace, but you can get things that are reliable. And this is a way to minimize the amount of things that you're focused on when you're using the wicks and focus on one that is the most important, right? Or will prove to be the most important, right? Not that these wouldn't be important, right? You don't want to have so much that you're focused on. It's very easy to have too much to focus on. And this is a way to kind of narrow things a little bit while still keeping a very effective outline of certain levels, okay? Using the wicks. So yeah, if we could stay below the 50% of this, which is ironically, this range, right? That 50% of this larger one is actually the 50% of this smaller one. So you can kind of see an overlap in there. And yeah, right, we'll kind of see what's going to happen. Let me see. Does 4 hour look like second stage? Yeah, I mean, it could look like that, Fritz, but given what I've just mentioned about how there's a higher time frame potential likelihood ahead of a rate cut that is overwhelmingly a bearish thing for the DXY, I don't necessarily see that buy model being reliable. I think this is going to be a moment where it's going to fail. This is one of those moments where all these things kind of align to help you justify the failure of a market maker buy or sell model. I want to see this fail if I'm going to look for the rate cuts to be bullish and the indices to be bullish. I would prefer to see this fail. So I'm going to anticipate that it's going to fail unless it gets outside of the upper portion of this and we start displacing towards this high. Then and only then will I be really solidified in the fact that this is going to go higher, and that may trigger in a potential decline in the indices, right? I mean, there's nothing wrong with that, right? It's been really bullish. We would just have to adjust and watch for the rejection, and that would justify a bearish move for the indices. And then we could look for sell side targets within the counter trend sell-off that would take place as a result of this unfolding towards these highs, creating the market maker buy model, right? If this does prove to fail and we get back down below this here, we could look at this low and the run higher that leads to the decline as the buy side of a market maker sell model, right? And we could just get quickly back in line with, the reason that this is going to be targeted. Okay. So yeah, these are some of the things that I'm going to be paying attention to. I do have this outlined. It may not look like I have the fair value gap outlined. I had it really, really small, right? Because it's already kind of messy more than I like. And we have a bunch of things going on in here. This is nasty. You see how intentional this is in not breaking above this high? These are absolutely telling us that this may fail, right? This is not what you want to see. You don't want to hang around in a fair value gap that's going to invert, right? This is showing signs that this is absolutely a strong level, right? A reliably strong level. And we also have two PD arrays. When you have an order block mixed with a fair value gap, that creates a high probability order block bearish in this case. If it was the other way around, a bullish order block with a fair value gap, that's high probability to be bullish. You see the similarities in the bullish example that led to that bullish order block holding and the bullish fair value gap holding. The similarities here with here are very, very visually pleasing. You can clearly see that when it was stuck holding inside of that fair value gap / order block here, it led to price rallying, right? Even the large wicks are there, right? Very similar. So I'm anticipating that this may occur in terms of us going lower. So I'm going to actually place that here, okay? And we'll see how that's going to unfold, right? What is that? Maybe I could just go like that. I know it's a little bit busy, but I'm trying to really drive home the point that these are the things that we're looking at, right? I'm not going to be trading with all this on my chart, right? I don't ever trade with I have a clean chart that I execute on, and you should too. But you don't want to be shy about the things that you're looking at in price, especially when you're learning early on, because some dumbass on social media is going to say, oh, it's too busy. So what? You know what else is busy? My equity curve going to the buy side, okay? So, shh, right? Just silence those people, okay? Well, don't silence them. Let them talk shit. But, just remember why we do this, right? Why is there so many things being pointed out? Because this is what's in my mind. And this is some of the stuff that I want to have in your mind. So then when you're studying, you're visually seeing things. You have nobody to impress. I don't have anyone to impress, right? My chart, the things that we call out, that's enough impression I want to have in people. I don't care what people think. Neither should you, right? And I just say that because social media is just, ugh, it's. I'm sure you guys know it's just insane. But yeah, just a reminder. Okay, it's okay to have things on your chart. If you don't like it and you like things being clean, you'll find ways to make it clean, and find ways to make it fit whatever it is that you're trying to point out. But do not limit the things that you have on your chart if you're just learning, because people like you want to show people your chart and they may think it's too busy. That is stupid. That's a character flaw inside of us if we think that way. That's worried about people's opinions. In this industry, you cannot at all worry about Joe Schmo on the internet and his opinion, because they want nothing more. A lot of people that are people that pass by and check out things and so on and so forth, just to kind of see, what's he doing. They would love nothing more. Or anyone that's sent like some nonsense in the chat, they want nothing more than to see anybody that's live come out here, call something and fail so they can throw out their toxic negativity, like throw it at you, right? Because they're projecting, because they don't know what the hell's happening, right? So that's the internet, right? So just keep that in mind. As ICT has mentioned, I didn't really believe that was the way it was until I spent the last 6 years watching how people behave on social media, even towards people like ICT that prove it. I mean, they have nothing but negative crap to say, and we're not here to impress anyone, especially those people. Honestly, they're good for the engagement on a channel. So I invite it, right? Send all the nonsense because the algorithm loves that, and I could care less, and I hope you guys could care less as well. But yeah, so yeah, it looks a little busy, but hopefully each of these different components makes sense as far as why I have it on the chart. Do you guys have any questions about all these different things that are here? Is there anything that seems like it's out of place, or maybe it doesn't make sense as far as why it's labeled there? I want to definitely make sure before I move on to the indices that you guys understand each of the components, because there's a lot going on this DXY chart. There's a lot of stuff that we're waiting for, that we're going to anticipate to help further drive home the fact that I do believe that this is going to go lower. And if not, right, if it breaks outside of this fair value gap and uses it as an inversion, and then we get a displacement, again, we could simply look to target this as a contingency plan. My main objective is to try to see if we could target this sell side trendline liquidity because of the rate cut. Just like last time when we talked about the rate cut, I want to see if this type of scenario can justify further bullishness in the indices, because that's just kind of the way it is with rate cuts. Like, they send the indices higher, and to further drive home that point and be able to trust it confidently, and be able to buy with no fear, and trust the bullishness, we want to see this decline. Okay, so yeah, let me know in the chat. Give me a 1 in the chat if everything makes sense, all the different components here, and if it does, it's a lot of stuff that we've been talking about for the last week or so, but it's just further details. Okay, Tyler says good. Tony says amazing. I'm glad you think so, brother. You've definitely been doing some amazing things as well. Fritz said price below the midpoint of the 3-month wick as well. Also, yeah. See, I'm glad that you're digging into that. So yeah, you got quarterly levels also very much supporting, what's happening here, and price stalling out, right? Yeah. Okay. Perfect. I'm glad, Fritz. I'm glad. And then the contingency idea, right? If this does fail and it does displace above, again, we're favoring one side, but people are idiots who don't have a backup plan, right? If you don't have a backup plan, doesn't mean that you're like, oh, it's going to go both sides, so I'm going to be right regardless. That's not the case. I could care less about being correct, right? I do care about, if it does not work out, I have a plan so we could be flexible and quickly get back in line. And I hope over the last 11 months you guys have been able to see that process and how it allows us to trust, even if something doesn't work out. We're able to get in line very quickly and trust the idea the other way, right? We're favoring one side, right? I'm favoring bearishness. So if it does end up being incorrect and invert this, and then it does disrespect this bearish order block, at least we have a plan to get back in line, right? We have our validation process. And if that's triggered to go the other way, we're able to then flip and very quickly get to a point of trust within the other way. Aside from, I'm looking to short, but it fails, so I'm just going to guess that because it failed, it's going to go higher. No, we have logic that enables us to then be flexible, right? Because it now inverts. And then we could trust that now as a support level. And then we see the invalidated order block. And so that sets us up to look at each of these quadrants here on this weekly wick as a support level, and then just continue to frame things, in that case, to the buy side. But again, we're going to favor sell side. Okay, so I want to see this fail, create a market maker sell model, and then we target the trend line liquidity. Okay, so yeah, hopefully the main objective and then the backup plan, if needed, is also understood. And as far as the logic, hopefully that makes sense as well. But again, we are solidified in the fact that this is probably going to fail because of the rate cuts, because of the downside in the yields, and because of the upside in the bonds. That favors more so, pretty heavily, that this is probably a fake rally and it's going to create a failure swing. And this daily fair value gap is going to be proven to have led to the start of the decline. And all of this was just manipulation to then get us into the rate cut that then may trigger in this engineered liquidity down here, right? And just pretty much rallied price up, stopped out all these people, trigger them into the wrong side, use this daily fair value gap as a counterparty to smart money shorts to then target the downside. Appreciate whoever that was that subscribed. Ben, appreciate you subscribing and finding value. I definitely value the fact that you guys lend me your ear. And as you guys quickly start to see in each call, I try to give you as much information as I can. I mean, I really do try my best to make it as easy to understand. Some of the stuff's complex, and there's a lot of moving parts, and there's a lot of mindset things that we have to talk about. But again, I appreciate that you guys get value and do things like subscribe to the channel, and tell people about the channel, and most importantly, spending time here listening to what I have to say. Because it's a big world that we live in, and especially on the internet. And you could be anywhere else, but you're here. So I just want you guys all to know that I really appreciate that, right? And I hope you guys have been getting value this year in tremendous fashion, and confidence by seeing how accurate this stuff is, and how you don't have to be ICT or use all his concepts to have a very reliable, dynamic process to succeed with, So again, thank you, Ben, for the subscription, and all of you guys for your patience and attention. Hopefully you guys have been getting value today. Could Monday the 20th be seen as second stage accumulation of market? Possibly. Talking about the DXY here. On what time frame are you talking about? Probably like the 1 hour. You said the 20th. Yeah, that may end up being the first stage accumulation. This could end up turning into the second stage accumulation. This decline in here, if it punches down once more, I mean, even this in here, right? If it does prove that it wants to continue to drop, let me take some of that off. If it does continue to prove that it wants to drop and we get below this, this will end up being the smart money reversal. We'll probably see one more retracement. And then if it gets down below this and it returns into that, right? The range of accumulation in there should be able to turn to a, oh man, look what I just see. Oh man, this is beautiful right here. That looks like a clue if I ever saw one. It looks like a pretty nice clue for a draw on liquidity. If this works out, this is a pretty solid contextual idea for this to want to reach lower, because that's inefficient. That is a gap in price, new week opening gap, an old one. I'm going to keep that solid because that may be very important later on. This market maker sell model could be framing the early stages for price to want to get down into this, because they left that on purpose. Ironically, all this stuff is happening and in the chart ahead of something that is extremely bearish for the DXY, which is a massive rate cut. It's going to be like 50 basis points, which is huge. Assuming that that's what's going to come out, that could be the catalyst that sends this from the higher time frame retracement all the way down to target these equal lows down here, because that's what this is too. So we got relative equal lows here on this higher time frame. Let me map that out real quick. Oh man, I'm glad that I dropped down to this 1 hour chart. I'm glad you guys got to see this. My private group probably would have saw this later, because we would have dropped down. So yeah, this right here has my attention dramatically for the possibilities of the buy side failing and this being a failed market maker buy model. This is also a mitigation block, okay? This here, this low, high, that failed to break this high, returning into that has now created a mitigation block. 50% of this range, if this is going to be a reliable mitigation block, 50%, oh, it's kind of already outlined, huh? This 50% of that range should not be traded into. If we do end up breaking down through this low, this will be an intermediate term high. This will end up turning into a long-term high, okay? And so this high here may end up being the line in the sand. If it breaks down, it'll oh, why is it not working? There we go. Oh wait, this is actually a previous week's high now. Yeah, so this just amplified the context that drives my opinion to want to seek sell side. Definitely, we're going to definitely save this video. And if we can get price to get down there as a result of the rate cuts, oh man, nobody's doing it like this, right? I don't, pay attention to social media and see if anybody even mentions this as a draw on liquidity. And if that does target that, I mean, man, that's going to be just another example of the foresight that we have. Not to toot my own horn or toot this community's horn, but I mean, is that not crystal clear in the understanding that we have? Like, is that not absolutely beautiful for smart money to have dropped down, pulled people in, then sucked them in again, getting people to think that it's still bullish ahead of rate cuts that are right around the corner? And they left this here on purpose. They don't leave this type of stuff for no reason. They can't leave inefficiency in the market. The market needs to seek efficiency, right? And if it's bearish and underlying fundamentals are showing that it's potentially bearish, like a heavy rate cut that's coming, this dropping into here is overwhelmingly bullish. If it can happen on the heels of a rate cut, I mean, you see how fundamentals align, right? The news aligns with the technicals, and the technicals on the higher time frame go in line with the lower time frame, and all the markets working together, painting this beautiful risk on, risk off picture, which is essentially just analysis of the overall market conditions. Doesn't that just look like obvious? How that could very easily be basically the reason why they ran higher, right? And why they're holding inside this daily fair value gap, right? It's kind of showing you early signs that this is potentially going to target this. And not only that, this is now engineered liquidity, engineered liquidity, engineered liquidity. So the lows here have been engineered for trend lines. Everybody is probably drawing trend lines like this. So, I mean, that's a very obvious view. And what's nested inside of it is this, a very large gap. Right? So, I mean, I hope you guys can see this, and hopefully it's like, wow, that looks pretty crystal clear. right? And it looks reasonable as far as why that would be the case, why it would target this when you couple the rate cut coming and the result from the last 21 times, which has resulted in generally higher indices and lower DXY. It has kind of rallied up, but I think all of this is within a larger context on that monthly chart, right? It's just pulling people to a premium so then they can drop once more, because smart money is long-term in nature. They have their short-term engagements, but they could be adding positions, like short positions, adding short positions, adding short positions, right? And then they may again put all that together to then target this down here. So yeah, this is definitely what my attention's on. I'm gonna keep the eyeball there, and we're gonna make sure that we save this to refer to in maybe a week, right? Maybe a week or two. It could spend a lot of time in here, right? Slowly make its way down there. But again, this fair value gap, like I said, is going to be extremely important for us to watch. Okay, extremely important. I'm gonna make this darker. Makes the dump on gold the past week look almost engineered. Yeah, no, absolutely. In my private group, I was saying that's probably fake, right? It's probably a fake drop, right? I mean, why not? Why would gold tank when the wars are happening? Countries are trying to go to the gold standard again. They're buying and buying and buying so much gold. The demand is insane for gold, and wars and the demand for the backing of their currencies or their economies to be with gold. I mean, it's just everything is a climate for gold to just get, as far as $10,000. It's highly manipulated. It's been for years, gold and silver, right? So I don't like gold is still bullish. I mean, you go to the higher time frame on gold. I mean, it literally, if you go to the monthly chart, does that look bearish to you? Does that look bearish long term at all? I would say no. What is it reaching for? It's been going higher for months, right? For what? 1, 2, 3, 4, 5, 6, 7, 8 weeks. What is it reaching for? It's taken buy stops. So stops have been taken. What is it reaching for now? Inefficiency, right? So inefficiency, once it targets that, it hits that, maybe it goes a little deeper, who knows? But all it needs to do is reach into this. It left that available, so it left equal lows for gold, for those that trade gold, right? And we'll see if it can reach down into that, watch the reaction. If it displaces hard from there, we're probably not done, right? But we'll see, right? We'll see. Again, that's also happening ahead of a rate cut, the decline, right? So the decline, when there's a rate cut, it should drop the dollar. If the dollar drops, gold should rally because they're inversely correlated for the most part. And, it's the same with the bonds, right? The bonds should go higher. Indices should go higher. Foreign currencies should go higher. Gold and silver should go higher if the dollar's dropping and the yields are dropping. That's kind of just the way everything works. There's no arguing that because that's just the way it is. I don't know why it's set up that way, but you can only argue so much, right, with the facts. But yeah, so those of you that trade gold, that's kind of my opinion. And with the DXY, again, this is my opinion here as well. Okay, so hopefully that makes sense. I'm going to just drop that real quick in my chat. Make sure that I get that very quickly noted. Yeah, so it's right there. All right. So yeah, with that being said, hopefully everything makes sense. Thank you guys for bearing with me and listening to that. Hopefully that made crystal clear sense. That dump to inefficiency was close enough to for government work. Yeah, ICT says that. He definitely has a point. That's for sure, because it's all controlled by the invisible hand, right? But yeah, so that's my opinion on DXY and all those other assets. Hopefully all of that has made sense so far, especially with the yields declining. That is definitely something that supports, if it can rally up and hold these levels, that supports this market maker sell model. And a failed market maker buy model. We also have a mitigation block. It's also a big, was it daily? Yeah, daily bearish order block with the fair value gap. So that is making this fair value gap in here, this daily fair value gap, highly significant for us to watch. If it holds, it's going to present us with that move to the sell side, and we'll have a market maker sell model to frame setups off of to the lows. And more importantly, this gap down here that's clearly inefficient, and it was clearly left for a purpose, right? So we'll see what that purpose ends up being as the next couple weeks unfold. But yeah, this is my opinion for DXY. Okay, and then when it comes in gold too, right? I have the same opinion. It's going to go lower to go higher. So now when we go to the indices, let me actually just switch to this. We'll keep this kind of clean and we'll kind of fly through this. Okay, so if we go to the monthly chart, nothing but bullishness. We're due for some type of retracement. We'll see whether that's going to unfold. If it does unfold and we get down below this low, say we violate this here. If we get down below this, I've been talking about this fair value gap for literally so long. This was the fair value gap I wanted to target up in here when the rate cut was coming, the first one. It did not reach down there and get it because it's just overwhelmingly bullish. I'm not entirely sure if that's what's going to be the result of what happens here. Is it going to not decline and just keep ripping? It could be the case because rate cuts are that significant and that much of a bullish indication, right? It may open up, we may get a little decline, and it may end up using this once more, but it seems like we are kind of reacting off of it already to the buy side. Again, we're going to continue to see price want to run to the buy side from this higher time frame, but if it does decline and break through this and we get down below this low, again, I would not be surprised if they end up trying to seek for this, but preferably, right, that's a contingency plan. If DXY is going to do what I'm telling you it's probably going to do, we should see this be extremely reactive. The rate cuts coming this week should be extremely bullish, and we should just see this continue to rip higher until proven otherwise. And again, ICT's rules, just as a reminder, when we're at all-time highs, you continue to push price to the buy side, right, until proven otherwise. And I could say that if we break down below this, that's sooner than this low, which is the weekly low, right? But if we start to violate these levels and this fair value gap, which we've used all week, last week, and the week before, so for the last 2 weeks, we've been using this. If this gets violated, that's going to be enough for me to then try to target this low, right? So we need this high to that low to remain behaving as a balanced price range, right? Because this is a big order block on that large time frame, so we don't want to see the 50% of this get targeted. It could dig a little bit into it and still be valid because we still got this, right? We still got this inversion bullish fair value gap. Okay, so I'm not surprised if we do get some. Let's see, I had the market maker model there and market maker sell model. We talked about both because there was both in the drop to the rally. Sell model occurred targeting this low, fully delivered, and then we wrote it to the buy side in my private group. But yeah, so this high to that low, because we're above it, should act as a BPR. If it retraces into it, it's just retracing to go higher. Okay, got these down candles. That's an order block on the 2-day. I think I'd rather just go with the weekly order block levels. I don't like these small down candles. I mean, they're kind of unreliable. This high to that low, you could still look at that as both sides are delivered, creating a BPR. But we'll see, right? We'll see what happens with this. We don't want to see it get down here. My line in the sand for bullishness is the low here, this fair value gap, and the 50% of this. If it gets down there, my attention goes to this low and these equal lows. Otherwise, I'm going to continue to want to see this just rage to the buy side. And every down delivery is going to just be simply a setup for another market maker buy model. Okay? And again, the highs and lows, liquidity-wise, current high and low, previous low from the previous candle, the weekly low here, and the wick quadrants to the downside as support levels. Everything else to the buy side is we're in discovery right now. We have no idea how far it can go, especially ahead of a rate cut. So yeah, that's pretty much everything I have to say, essentially. How quickly I just went over this and determined what the potential narrative is for the indices, that can be done on every single asset, right? You can, once you learn the process that I go into great detail talking about, you'll learn that it doesn't take 2 hours to do the video or to do an analysis. There's just so many details, and I know a lot of, like, all of you guys are at different levels, and everyone that, like, a lot of people that hop on are different levels. So I have to be extremely thorough, and I hope that's beneficial to you, because I could take 10 minutes, 20 minutes and figure out everything, as we kind of do on a daily basis in the private group, day to day. But Sundays you want to spend a lot of time, right? You want to be very, very close to the details and not really miss anything. And look at all these assets, because, you know, the speed in which you're able to get to a determination of bias and narrative that's trustworthy on the bond or on the indices is going to be heavily reliant on intermarket relationships and the underlying reasons, aside from just what this is doing. Just because you see this going higher, that doesn't mean that it's going to be overwhelmingly bullish forever. Or if it's bearish, you know, like a big decline, that doesn't mean that it's necessarily ready to go lower, because there could be other factors that lead it to not having that type of delivery take place, like you see here. This huge decline, when you go to the weekly chart, does that look like 3 PD arrays were violated on the higher time frame? If you looked at it on the daily chart, you probably thought that the world was ending. But when you move up to the weekly chart, you clearly see it just reached for a fair value gap and an order block. And then it started rallying again. And 3 PD arrays weren't violated. If it would have taken this out and inverted it, yeah, you could have made an argument that it's probably going to target, you know, some of these lower levels. Did that happen? No. It hit the third PD array like a brick wall and reversed, because that's just the way it is. And this is why we are able to stay in line more often than not. And I hope you guys, over the year so far, the last almost 11 months, with me doing this publicly, hopefully you guys on YouTube have been able to see that, the power in the things that we're operating within. And you know, those of you in my private group, you know the vibes. Again, so I just want to remind everybody, we are going to put this call to a close. But if you've gotten value so far and you enjoy what I do and you think it could help other people, definitely don't forget to like the video, subscribe to the channel. Our community is, you know, pretty exclusive, pretty small, but I would really enjoy being able to reach more people that may be struggling, because if it's helped you guys, which you guys have voiced to me on a regular basis how much this stuff has helped you, it would be wonderful for us to be able to, you know, get this to more people. And then eventually I hope that, you know, you guys become good enough that you can continue to pass the blessing along to others, because that's the main reason why I'm even live on YouTube or doing anything, you know, in terms of sharing things. I'm trying to pass the blessing forward. And if you guys can help me with that by simply, you know, just liking the videos, spreading the word, like word of mouth, and subscribing to the channel, and always showing up, that is more than enough of a thank you that you can give to me. So yeah. So thank you to all of you guys that already do that. And those of you that are new, hopefully you guys have gotten value. And hopefully we continue to have you hop on and continue to get value and grow with us as a community. And hopefully you grow as a trader with the things that I choose to share with you guys, right? And hopefully you get better with ICT concepts along the way, because that's, you know, that's kind of where we live in this industry, right? Is in the realm of ICT and the ICT army, right? In the WMG trading family, okay? So yeah, no worries, Joan. Appreciate you hopping on as always. I love that my private group students hop on all the time. You guys are amazing. Yeah, no worries, Fritz. But yeah, and Precious, Ado Precious. Oh, I probably butchered your name, but appreciate you hopping on, and you guys are absolutely welcome. But yeah, so with that being said, again, God bless you guys. Thank you so much for your time. Hopefully you guys got value. And again, don't forget to spread the word, spread the love. And I guess I will see you guys on Tuesday here on YouTube. And those of you in my private group, just let me know if you need anything. I'll be here for more amplified assistance today if you need me. And I will talk to you guys in my private group tomorrow morning, bright and early. I believe there's no news. Yeah, there's no news, so we'll be up at least by 6, probably earlier. So just send me a DM if you're up before that, and we can start the call sooner. BWK Zhang, you're welcome, brother. Right? But yeah, so have a good weekend, guys. God bless, and I will talk to you guys on the next one.